Hi, my name is Bryan Kelly. I'm a senior mortgage consultant. I've been in the industry for about 7 years, and I've been teaching mortgage classes for about 6 years. The continuing education class you're going to be attending is going to have 4 sections to it. Section 1, we're going to go through some definitions and some terminology, which are going to give us a foundation to help understand the class as we progress. We're also going to talk about Fannie Mae and Freddie Mac's role, as well as the Federal Reserve and interest rates. It's going to give us a good foundation and, again, an overview of the mortgage market. Section 2, we're going to talk about the infamous credit crunch. Also, you heard a lot about the mortgage meltdown. What is it? How did it happen? Why did it happen? And most importantly, moving forward, what changes have lenders made to their guidelines? This is so important because the changes the lenders have made to their guidelines is going to affect your buyer's ability to secure a mortgage, which is going to affect your sellers, because if there's less people available to secure mortgages due to these changes, it's going to affect your seller's ability to sell their property and ultimately your business and your bottom line. So that's a really, really important section. We're going to talk about a lot of the guideline changes. And section 3, we're going to talk about loan approval. When a buyer goes to get approved for a loan, we're going to show you what is most important: debt to income ratios, credit scores, how all that works. We're also going to talk about some simple tips to help keep your buyers out of trouble. Sometimes a buyer inadvertently does something, they don't think it's going to matter, but due to lender guidelines and certain rules, it really could possibly take one of the best loan program options away from them. So again, keeping your buyers out of trouble is really important. Section 4, we're going to wrap it all together and give specific examples of some fantastic loan programs that are still out there that can help. A lot of times a seller is willing to discount the purchase price. Well, rather than discount the purchase price, what if the seller gave a credit at the closing table? How could those credits can be used? A lot of realtors are familiar with seller credits for closing costs, but what happens if we use those credits for different loan program options, such as a 2-1 buy down? Buying the interest rate down in the early years can make a mortgage payment extremely low for the first couple of years. How about a single premium PMI? You're probably not familiar with that, but paying a lump sum can wipe out your monthly PMI payments and again, keep the mortgage payment low. Combining these together could really open up your pool of buyers for some of the properties that you have listed. And let's not forget FHA loans. They've pretty much been non-existent in recent years because there have been so many mortgage options out there. FHA loans are making a very strong comeback. FHA loans are more lenient on credit, and when used with a down payment assistance program, a buyer can become a homeowner with no money out of their own pocket. So we're going to talk a lot about these great loan programs that can really help, and then we're going to get all your questions answered and make sure that you're better prepared to serve your clients and keep them abreast of what's going on in the mortgage industry. It's a fantastic class. It's really important in today's market with all the changes, and I look forward to seeing you soon. Have a great day.